Dear members, today we are holding this webinar, which is a peculiar knowledge series we brought to expand our knowledge awareness on investors. And particularly, it is the choice of our national president, Mr. CA K. Suresh sir, to have the digital utilization by our small investors. And we have with us our international speaker, first time we are hosting, who had enough knowledge in bringing out the technologies and the awareness how that should be used by the retail speaker, the investors. So in this background, I will be glad to introduce Mr. K. Suresh sir, who is the national president of ANMI and associate member of Institute of Chartered Accountants of India and associate member of Institute of Company Secretaries of India and fellow member of Insurance Institute of India. Sir, you have covered wide range of three sectors, sir. Then more, he is having, Mr. Suresh is having more than 30 years of experience in finance, securities market, accounts, internal audit, and marketing. Mostly served in financial sector and also for short period served in media sector. And he held earlier the positions like Vice President, Apple Credit Corporation, Finance Controller and Company Secretary, India Cements Capital Limited, Senior General Manager, the New India Express, then President and CEO of India Cements Capital Market, Director of India Cements Investment Services Limited. Then he's a member of SEBI committee, which is set up as Secondary Market Advisory Committee, which is called as MAC as well. Then he is Honorable Secretary of Madras Management Association. Then we have a he also served as a past president earlier with the Hindustan Chamber of Commerce. Then past president and director of Association of National Exchange Member of India. He is serving second term in our association as the president. It is a very privileged position which we feel honored. Then he also served as a treasurer earlier with Tamil Nadu Travel Mart and also ex-member of Divisional Railway Users Consultative Committee in Chennai and member of governing body of Vidyodaya Schools. And he also is a trustee of Tamil Nadu Foundation. The regular appearance on TV channels for securities market relating to shows and general issues, debates. He is known for his public speeches and also he carries with him the baggage of a long talent and experience in capital markets. So with this brief introduction, I request our national president to give his welcome address on the topic of the present webinar. Thank you very much, sir. Please take it.
Yeah, thank you, Prasadji. On behalf of ANMI, I am extending my warm welcome to today's speaker, Mr. Chandrasekhar ji, and my members and various clients of various members also today who have joined us for learning some tricks for the purpose of ensuring trade. You know very well, stock market is a big ocean. Actually, it's not easy to navigate. Particularly people who are becoming rather taking up this trading activity without knowing, rather having some basic knowledge, they are plunging into activities and finally resulting in huge losses. So as a part of our objective, that is ANMI's objective, is to bring in a discipline in trading also. So we thought that definitely there are many tools available, but may not be used by the various investors because of lack of not having any idea about it or not knowing it. So today we thought, as a part of our knowledge series, it is 191, I think, knowledge series. So we thought, why can't we bring out this? See, normally we have seminars for the benefit of our members, brokers, on various compliances, etc. But I told the Secretariat that we should also have seminar or webinar on matters pertaining to the investors also. So that, see, ultimately a broker's rather survival is on investors only. Better trade, better result, that means better income to the broker also. So from that angle, it is necessary that we should have a proper, rather we should make the investors understand the ways and means to do the trade in a better way. So that's why today we are having with us Mr. Chandrasekhar. Definitely, I am hopeful that every viewer of this particular webinar will be, feeling the utility of this program definitely, and there will be a lot of takeaways in this program. Wishing all the best, sir. Thank you.
Thank you, sir.
Thank you very much, sir, for your kind welcome. And I think Mr. Chandrasekhar Iyer, he is coming from with international experiences, and particularly with the technology. He is very fond of utilizing the technology to relating to the capital markets. So I just give the little brief introduction of the profile of Mr. Chandra. He is a postgraduate in commerce, chartered accountant, and company secretary. I think both my president and the present speaker shares the same company secretary profile, and also the chartered accountants belong to them. He is also a member of Institute of Public Accounts and Australia, and also Indian Institute of Financial Accounts, UK. An experienced corporate leader, he previously served as an independent director on the board of a listed insurance company in Oman. With expertise in corporate finance, strategic planning, and capital markets, Chandra is recognized as a thought leader in technology integration and business growth. He contributes regularly to Indian industry discussions across Indian and also the Gulf Corporation Council (GCC), which is known for. Sir, this is thank you very much for spending your time for us today to share your international experiences vis-a-vis the Indian scenario today. How the Indian capital market is shaping up with the spurt, whatever is happening month on month, the increase on retail participation, and also the interest conversion, what is happening in the normal people to graduates level to coming into the market household as well. So with this brief introduction, sir, thank you very much again. Please, I request you to please speak on the topic on that which is relevant to the small investors. Thank you very much, sir.
Thank you very much, Dr. Prasad, and thank you very much, CAK Suresh. It's really an absolute delight in seeing both of you, and also giving me an opportunity to, via your platform, to reach out to a lot of listeners. And whatever I could share, I have just made some very interesting slides also. I would like to give a brief background before that in terms of what is it that I'm going to talk about it, a brief introduction on that. So before we dive into the slides, I want you to take the moment to set the context as to why we are discussing this topic today. So over the last few years, the investing landscape, as you know, has changed completely. What used to be a slow and paperwork-driven process has become few taps on the phone. The applications are doing all the work. Anyone today can open an account, buy a stock, and look at the charts, and within minutes, that you can do whatever you want to. The shift has brought, as you all know, millions of young people, particularly, who are trying to make a sense of things on their own. Now, that's a very good thing. Access is very important. As we know, India had a digital explosion soon after the COVID. I mean, in fact, during the COVID itself, the digital explosion happened more due to compulsion and more due to sort of, the distances, the social distances enabled them to sort of get into digital. So the explosion happened at that time. We all know how UPI happened. As I say, good thing is there is an access, but the access without understanding can certainly lead to a lot of trouble. Many new investors walk in with confidence, but go without a framework. They depend on notifications, social media, which is again a very dead trap according to me, and someone else's conviction, which I don't think is right. The tools look very friendly, but the risk behind them haven't changed. At the same time, as you all know, the ecosystem around investing has exploded. The foreign investors' interest into the country has tremendously increased, notwithstanding the geopolitical tensions, what is happening. India has been receiving huge amount of FDIs, as you know. These tools, there are lots of tools for trading, tools for screening stocks, tools that claim to use AI, artificial intelligence, and tools that auto-invest for you, and of course, endless opinions from influencers, and some of them are genuinely useful. Some are just noise, and some can quietly push you into behavior which you may regret later. So friends, the question is not which tool is the best. I must put a caveat here, as they say, buyers beware, they say. The point here is the scope and the subject of my topic is not to identify and spot on a particular tool, because this is totally not going to be endorsing any particular tool, but this is a general guideline to all my friends here to be very careful in terms of how they have to do things when they are investing in the stock market. So the real question is, how do I stay in control when the tools are getting smarter and more persuasive? You must have seen via Facebook, via social media, Instagram, and also WhatsApp, recommendations keep coming. They come in swift measures, to telegrams also. The whole idea is, that's the idea behind this session. I'm not here to complicate the topic. The topic may not to overwhelm also with any jargons. My aim is simply very simple: to help you understand how to pick the right tools for your style, how to use them in a very disciplined way, and also how to avoid common mistakes that trip up small investors. It's very, very important, because today small investors are showing a lot of interest in the stock market, and Indian stock market, as they say, have matured. To a large extent, the digitization, as you all know, has accelerated, or maybe given the progress in terms of getting the market maturing fairly very quickly. If you are just starting out, according to me, this may probably help you to avoid some of the early traps. And if you have been investing for a while, friends, it may also help you in your own behavior with a bit more clarity. At the end of the day, as you all know, market rewards patience. Patience, patience, and patience. And also understanding and good habits, on investment, not speed. Please be understand. Speed will be thrilling, and thrill will kill, as they say. My hope is that after this session, you all will feel more confident in using the tools as aids and not crutches. More comfortable in making decisions based on what you understand and not what someone else thinks. I would like to go off to my slides and then deal with them. Sir, it's a small glitch, sir. 1 minute. Yeah. Is my screen visible?
Yeah, visible, sir.
Thank you.
Yes.
Thank you. So the topic of today is smart tools for small investors, how to choose, use, and stay. And what do you say? Stay in the market? Yeah. So basically, let's look at the first slide. As we all know, navigating the digital landscape is very, very difficult. Investing today is very, I would say, easy, right? So what you can do is, today, investing has become very, very easy. You just have to tap the app, but the convenience can be deceptive, friends. The convenience can be very deceptive. Tools generally empower us, but today we will learn how to use them and not go and follow them very blindly. As we all know, access and safe decisions. What is this? Ease of use can mask underlying risk. What are the underlying risks? The apps don't say what to invest, what not to invest. It only recommends. Basically, recommending is, are you understanding what you are going to invest? The underlying risk is very, very important, because it's your hard-earned money. Hence, making thoughtful decision making becomes very, very crucial. Tools can help as well as harm. Digital tools, as you know, are double-edged. They can empower smart choices and encourage reckless ones. What does this mean, actually? Let us say India today actually are finding so many tools which are available. you will find day in and day out, there are recommendations which are coming saying that you invest in this stock, and they say, okay, this is based on AI platform, and this triggers at a particular point in time, and you can go ahead and invest. Is that the right thing to do so? I don't think so. Our goal today should be use the digital tools very smartly, not blindly. Today we are seeing, as on date, I think this is the last statistics earlier, somewhere in the middle of this year, there are 12 crore demat accounts. What we have become? There are 75% new entrants. The number of active demat accounts is really skyrocketing, reflecting a widespread retail interest. The best part is that, as they say, the democratization has happened in such a big way. Why I'm using the word democratization is anyone can enter the stock market at any time, even for as small as money as 500 and 1000 rupees. So you can either enter the stock market, or probably you can even enter what you call the mutual fund market, basically the secondary markets also. Then what is happening is 75% are new entrants. Is that the right thing? Yes. Day in and day out, you will see a lot of new people coming in, and they want to sort of enter the stock market in a big way. So that is something which is making a big way. The demographic structure of the investors are less than 35. See, our honorable Prime Minister and also some of the major political leaders also say India is always currently, of course, enjoying what we call it as demographic dividends. The demographic dividend is what? We have a very young population. The demographic is primarily consisting of young investors always eager to build wealth early. So naturally, apps and influencers drive the wave. So what does that mean actually? Market entry is heavily influenced by mobile applications offering sleek user interface and content from social media, financial influencers, and the environment demands very critical thinking. Now that's where it comes through, because SEBI has told us from time to time and notified all the investors generally from time to time, don't get carried away by people who are not directly registered, or those who are not in a position to advise, or those who are not authorized to invest. So basically, take care on that particular front. There are a spectrum of investment tools which are available. What are those tools available? One is the trading apps, okay, platforms for executing trades. Then it says managing portfolios, because there are apps on which you can give them discretionary or even non-discretionary portfolio, and they manage your portfolios. And basically, the returns are also whatever they say. And then the question is that assured returns, again, subject to whatever the SEBI guidelines say, and accessing real-time market data. Yes, all this from a digital point of view looks very interesting. But again, one has to be very, very careful in terms of looking at whether you understand the environment or the platform, or how they do the beta testing of their trading and brokerage apps, and how do they deliver the results for you. So that's something which we need to know, not just subscribe to an app and start trading from next day. Then research and screening tools. Now, the second thing which happens in the market is there is a lot of research and screening tools which are available, which gives you reports on various corporates. It gives you advanced analytics, charting of software, filters to identify potential stocks based on certain criteria. Now, again, I'm telling you, this is very, very knowledge-based sort of information which is available to you. So one need to spend a lot of time. It's not a quick fix solution that you go into the market, look at these advanced research and screening tools, start investing. That's another thing. Robo-advisors. Now, what are these robo-advisors? Robo-advisors basically automated algorithm-driven portfolio management services based on refined risk tolerance. Okay, I'm using some very big words. I would like to draw an analogy in terms of what is this robo-advisors to what is prevailing currently in, let's say, in YouTube, in Facebook, and Insta. As you all know, if you continuously see a particular screen, and if you watch a particular reel, or if you watch a particular video, what happens is the software at the back end is trained to sort of identify the eyeball of the individual who is watching it on their mobile screen, or maybe on even the computer. So what really happens that you continuously get information bombarding, I would say. That's a very strong word I'm using. The information is bombarded to the investors to see that you continuously get recommendations about buy A stock, buy B stock, or some information which enthuses you. Basically, what they do is that they they let the investors know that this is available, and the investor is ultimately compelled to buy. So basically, algorithm driven portfolio management does that. You do something, automatically it decides that yes, you are what the software itself makes a profile of you because of your continuous watching of a particular type of video, or maybe a reel or something of that nature. So it automatically recommends to you that buy this stock, buy this stock. Certainly, friends, it's not the right thing to do so. You need to be very careful. Learning and simulations tools. What are these? Paper trading and educational content for risk-free practice and knowledge building. Now, this is a very good tool which is available, and you want need to be very, because this is based on learning and simulation. So you learn and try to do a real-time stock market deal in the sense by way of simulation and understand how you perform. So that will give you some sort of a conclusion as to how you are performing, how you are going to do. The next one is community and social investing. What is this community and social investing? It's coming to you because, again, I would use a very strong word. People generally follow what you call it as mob investing. In today's Gen Z language, I would like to say it's a FOMO, that is fear of missing out. You don't want to miss out on investing in stocks because your neighbor invested in that stock, or your friend or your colleague invested in that stock. So these are basically coming out of forums, groups, and platforms where investors share ideas and discuss strategies. I'm saying use with caution. Use tremendous caution. Use your own personal discretion. These are very, very critical according to me. Then let's assume, let's look at a situation that what are these double-edged sword of trading apps? The trading apps are, yes, they are very good. They have a very robust mechanism, and it is based on a very good user interface, high-ended platform, and it gives you real-time answers, etc., etc. So we will analyze the benefits as well as the risk. What is it? The benefits? The benefits are it is easy to start, right? Easy to start. You can subscribe to an app and start trading from day one. And very intuitive user interfaces. Again, this also works on certain algorithms. Please understand. You really don't know what is working behind it. And it is also works on a very low commission, a low cost entry points. Okay. And fast digital onboarding services. This is what it is. Okay. It's a fast digital and onboarding services. And what they say is they often feel like games. It's just like when you're working on a video game. Notifications from them, sometimes what happens is it triggers in our mind, that is the investor's mind, some emotional traits. We sort of tend to choose apps that suit our long-term goals. Ultimately, we have to choose only those applications which meet our long-term goals, not just what the apps recommend to you. And don't just go by the hype, which is there. So this is the double-edged sword of trading apps. The next would be leveraging screening and research tools. What is this? Let's look at the situation. Screenings and analytical tools are really great for self-driven investors. Okay. You read a particular annual report, or you read a chart, whether it is a chart which shows the performance of a stock, whether it's ups and downs in terms of relating to a corporate information which is announced by the company, or which is related to certain national economic or maybe monetary policy given by the government, or maybe pure geopolitics. Sometimes you may feel the oil prices are hit because of a certain war-like situation somewhere in the world. So what happens? The oil prices go up. So naturally, immediately, the companies which are going to be affected by the oil price will get impacted. So those are basically aspects that we need to consider. So essentially, we need to look at situations like this. So efficient screeners allow filtering thousands of stock, specifically by financial ratios, that is price earnings ratio, market cap debt, essential for conducting fundamental and technical analysis. What are the risks of data overload? The risks are this. There is a data overload. If you are not in a position to understand these complex charts, complex numbers, my recommendation would be that don't get into that particular road, because you need to do a lot of research, lot of studies before you get into that. This confusing data for a definitive insight. Tools, friends, don't replace your judgment. Your judgment, your judgment with your hard-earned money is very, very important. Focusing too much on short-term price movements and technical indicators. This is another pitfall, because what happens is we always, I think I can relate to situations which were prevailing in back home. I think in when where I come from in Mumbai, during the period from 80s to 90s, when things were not as streamlined, as digitized as they are right now, people used to invest in the stock market by tips which is giving from their friends or something of that nature, and they used to get excited. They used to buy in IPOs, buy IPOs for rupees 10. And if they find their stock going up to 20 rupees, let's say in the next about 2 months or 3 months, they get excited and go and sell the shares. But it's not the right strategy to do so. The converse can also come and hit them at some time, So that's the problems of the learning and technical tools. The next one would be the promise of robo-advisors and automation. This is, I think, currently is having a lot of rampant situation, I would say. Because today what we are seeing in the market, a lot of robo-advisors have come. There are no human people to tell you so, because everything is digital. There is no in-person meetings come. The human advisors come and tell you. You do online sign up. Then you give your investment profile, and you also say what is your goal. For example, let's say you want to invest, let's say 1 lakh or 2 lakhs of rupees to commence to start your market experience, and you give them a goal. Then I want this 1 lakh to sort of become around about 5 lakhs or maybe 7 lakhs in certain period of time. I got say 5 years or 6 years or 10 years, whatever it is. Then accordingly, they decide that yes, you are a particular investor. Your risk is profiled. Based on your risk profiling, the robo advisors, or I would say the other types of automated apps recommend you, tell you that these are the stocks to be bought, because in their platform they would have structured a situation where these stocks generally go at an accelerated pace, at periodical intervals. Let's say, I'm just saying very hypothetically, let's say 10%, 15%, 20% over a certain time frame, subject to, of course, receipt of certain fresh information which is outside the company. Let's say government policies, government regulations, international, impact, and so on and so forth. So what is it? This is robo advisors generally offer a very low cost, diversified portfolio management with ideal and also minimal effort. The ideal for beginners is the portfolio is also based on risk-based allocation. As I mentioned to you, you invest 1 lakh and then they tell you that, okay, you tell them that this is what you want certain number of times. They say, okay, your goal is unrealistic, or let's say they say goal is realistic. Then based on the risk allocation, portfolios are automatically constructed and rebalanced on your stated risk and tolerance. And what really happens? The automation reduces the human error. Automation reduces the human error, but cannot eliminate the fundamental volatility. What is this fundamental volatility? That's basically exists in the market. Sudden volatility, nobody can experience. I'm talking only again about international developments. You see sudden wars somewhere, or you see some tariffs. As you all know, recently we all saw how the United States went on putting tariffs on various countries put together, how those things impacted every other country, including India. It will have some sort of a I would say an indirect down the line impact on even in the stock market in India also. Okay. So as I say, important warning is some tools or advisory services are, friends, unregulated. So you have to be careful. If or advisor is registered with the relevant authority or a body, SEBI, I would say, please avoid. Don't even look at them. That's my simple and I would appeal to all of you. Now, avoiding the most costly beginner mistakes, I would say. What are these? Impatience and misinformation are two greatest threats to new investors' capital. We cannot afford to be impatient. Why, I would say? Because what people generally do, that they don't have the time to look at all these complexities. They immediately take social media tips and they look at Telegram channels, WhatsApp channels. YouTube videos. YouTube videos are generally having people who are recommending certain stocks and so on and so forth. But then again, SEBI has come down very heavily on all those influences because that's not allowed or because you can't afford to do so. So that aspect of it is brought under control to a large extent. But nevertheless, I would strongly recommend that don't go by these social media tips which are coming to you. The next part which I would like to tell you is jumping into F&O. What is F&O? That is called futures and options. I think most of the market players here are already well versed in this particular aspect, that is futures and options. But this is not something which is good for a beginner investor in the stock market. These are high leverage products designed for experienced traders, not retail investors building long-term wealth. Believing in AI prediction hype. Because today, as you see, it has become fancy for many of the, I would say, market players to sort of push a particular concept called AI. Using artificial intelligence and also giving a predictive mechanism to say, okay, your stock is today is available at a particular value, and it will be at that particular value going forward, let's say month 2, month 3, or whatever the time frame is. See, what happens is artificial intelligence is being structured very properly, no doubt. But no algorithm, friends, can guarantee future market movements because a lot of subjectivity comes into play, which nobody can really anticipate. Confusing trading with investing. Trading, friends, it's a short-term speculation because people are day traders also. Investors cannot be day traders. Investing is for long-term. It's for long-term capital compounding. So I would strongly recommend that you should look at focus on the latter, not on trading, because trading is only for experts. If you don't understand the product, the mantra is do not invest into it. That's my mantra. Now, I would like to bring across certain globally accepted points in terms of what we are seeing in various other geographies. In the US, what happens is apps like Robinhood, popular fractional shares, they say, they also saw the rise of meme stocks, showcasing both accessibility and the chaos of hard behavior. So here, what we can see is that Robinhood made it easy to buy fractional shares. So people could invest with small amounts of money. Okay, this was a great success. But many new investors jumped in without really understanding the risk. It led to losses for quite a few. In the case of Singapore, there it is much more conservative, but then again investor friendly. Singapore, the regulator said the brokers need to run a risk profiling on customers before allowing them to trade. A wonderful thing, I would say so, because the brokers should understand what is the risk profile of the particular investor. As I mentioned to you earlier, you're going to invest 1 lakh in the market and you want a certain amount of return at a particular point of time. Now, if this expectation is very unrealistic, it is the job of the broker to tell you, look here, investor, you cannot do this. You cannot achieve this sort of return within this time frame because you are under a particular risk profile which will not allow you that. Then coming to the UK market. UK market is investor protection rules are even tighter. They limit how certain products can be marketed at demand. It says very clear warnings about risk. The goal is to stop people from accidentally wandering into something they don't understand. So let's look at the last slide. The point here is, what is the sum and substance of what I have talked to you so far, that you have to look at 5-point safety checklist. What is the checklist? As I mentioned to you earlier, the focus or the objective of this particular discussion is not to recommend A, B, C particular application or a particular robo-advisor or an automated app or something like that, because it's not the focus or the objective, because there are numerous ones which are available. Ultimately, the decision entirely rests with the investor concerned. So these are things, checklist point of view, you need to look at is, first of all, see whether the platform is registered with SEBI. If verified that the brokerage tool or the advisor is fully compliant and regulated by the local financial bodies. And secondly, very, very important, even assuming that, this is, according to me, is the most important thing. Let's look at its situation. You have to ask yourself the question that, can you afford to lose the money? You invest, let's say, 1 lakh of rupees. Are you ready to risk losing the entire 1 lakh of rupees when you're investing in the market? If the answer is not very sure, and if you are slightly concerned about it, my friends, I would say stay away. At least this is not the right time for you to get into the market and sort of burn away your money. So never use funds needed for emergencies or short-term stability. Ask yourself the next question. What do you understand about it? Do you understand everything about the stock market? Do you understand everything about the particular type of investment vehicle, stocks, funds, bond, you know, and discuss with your friend with whom you are very confident about discussing, who and then, if you have not done enough research, it's all the more important that you need to discuss with friends or someone who has already had gone into it or navigated this. And most important thing, you should ask yourself the question, then are you investing or are you reacting? You know, I would also try to bring an analogy in terms of saying that am I investing or reacting could also be limited, can be related to something called response and reaction. Where response means you are investing based on a valid database or valid analysis. That means you are not basing your decision based on immediate market news, fear, greed, or fear of missing out. What we call it in Gen Z language, which I mentioned earlier, is FOMO. Okay, so it's very, very important. You should not react. You should invest, but it's like a response. You look at every information which is available to you, look at it very carefully, and then you take a call whether you should do it or not. Last but not the least is the strategy simple? See, what happens is complex strategies rarely beat simple, disciplined investing. My simple mantra, or say my long years or whatever, as an investor, I am not a stock market trader or anything like that. I've been only an investor. I can only say keep your approach clean, simple, and understandable. Uh, Before I conclude, I also would like to add here that I personally find that a lay investor or a person who is going to come into the market for the first time, I think you should test the water. You should test the water and look at situation of investing in the market through indirect means. Indirect means could also mean that look at how funds are performing. Ask your broker whether if you are not comfortable in terms of directly investing, you can look at indirect means of investing into the market. So with these words, I would like to conclude my session, and I will like to throw open the floor for any questions or anything. Thank you, ANMI. Thank you, Mr. Suresh and Dr. Prasad, for giving me the opportunity.
Yeah, thank you, sir. I think you brought out the various aspects of current scenario, how the digitalization is camouflaged and misleading the public, so that people should not take it granted that everything is easy. Many people actually fell to such type of applications, such type of apps, and losing huge money. Actually, it happened. Actually, this is rather happening also.
Yeah, correct, sir.
Any questions, sir? Anything is there in the chat box?
Sir, I have two questions from the feedback what we
Yes,
got. Sir, with your international experience, like
yeah,
how
yeah.
you see Indian stock market and the new entrants coming, is it the same scenarios happening across the world? Because you visited many countries in this regard and you had a sufficient experience in capital markets. How you see Indian new entrants playing their investing while investing the money? Are you feeling they are safe and they are adopting all the technological utilities? What is
The answer to this question could be framed in a different manner. Firstly, before coming into the question proper, I would like to give a little context in terms of what the Indian companies are doing in the last about 10 to 12 years, very specifically. I have been seeing that many of the Indian companies, which were hitherto insulated or maybe focused only India centric, they are coming and setting up their, I would say, operations in Dubai. They are setting up their operations lately in Saudi Arabia also. Because what has happened is Indian companies are looking overseas. So what has that got to do with this question? Okay, it has got to do with this question. This is my understanding. Because when Indian companies look for overseas development in terms of expansion and so on and so forth, ultimately, it is going to sort of impact on the company's growth. Okay. Now, when these companies are coming, the investors over there, I'm not talking of, please understand, Indian investors. I'm talking of hardcore, I would say, portfolio investors who are high net worth investors who are looking at the stock market in India. Now, people who were not, I'm talking traditionally the investors from the Middle East, from where I belong, because I work and live here and I've been here for a long time now. Uh, they were never looking at India prior to, let's say, prior to COVID or something like that, whenever digitization was not in a great peak. But then, apart from, of course, the expatriate Indians, we all basically, our motherland is India. We want to invest in India. And with all the digitization, we understand the pros and cons to a large extent. But for these sophisticated investors who are here are looking at India with a lot of optimism. They have invested in India in a very big way. I can see large volume of portfolio funds are entering the stock markets from time to time. Of course, these estimates are anybody's for that matter, but I would strongly say they have really jumped in the last around about 5 years or so, nearly around about 200%. The volume I may not be having to that access to that because they are coming from various means. Because earlier they used to come through, Mauritius and other places, but I think today direct investment vehicle is available, and then there are flexible, I would say, double taxation avoidance treaty which is available between India and some of the countries in the Middle East also. So people don't mind investing directly into India, and people are even investing in FDI. Let me tell you, FDI in the sense they are directly investing into the companies. So it makes sense to them. So there is a lots and lots of investment interest in India. They see that the potential is quite huge because the type of our satellite cities which are coming up, the I would say the smart cities, that is showing a lot of promise according to me, and the fast growing infrastructure development in all the areas. Those are very, very significant pointers for people to really look at it and look at the other way around. Which are the other markets which are giving them that sort of return, and the global markets, without naming any specific markets, the returns are nothing very significant. If you see a spike in a particular market, that may be more due to some political, I would say, statements, or maybe some sort of, decisions which are taken more, which is affecting geopolitics. But that's not fundamental, according to me. So those are things which are I wanted to share.
Thank you, sir. I think what is the recommendation when it is come from any brokerage or any in public platforms on how, as an investor, new investor, identify this as a genuine technical based, fundamental based, or it is for how much trust he can put in that, according to you?
See,
Is there
first
any
of
tool
all,
available? Like what my interest is that is there any AI tool today? So much of AI is happening around us. So is there anything that we can suggest that to verify whether this is, because all these YouTube influencers, as you mentioned earlier, so they're all capturing the market by referring some tip recommendation slab up and down, but the all investors are getting trapped. So do you have any experience in this?
see, every broker or maybe I would say trader in the market definitely has come up with their own with idea of recommending to their investors or their clients in terms of stock market recommendations and so on and so forth. All I can say is that every investor, I mean, as I mentioned earlier in my conversation, is basically in terms of educating yourself. Because if you're a lay investor, trust me, the education and understanding the market at the first instant may not be all that easy. But I'm saying that if you are going to be in the stock market for long term, so you need to sort of upskill yourself. It's very, very important in some way or the other. And you cannot rely only on information which is coming from the broking houses. I'm not trying to say that you should not look at the broking houses, because that's a trust involvement. Because what happens is a broker and an investor is a trust which is built over the years. A recommendation comes from them, because an investor has to ultimately decide whether he or she has to invest in that stock or not. So they should have independent validation from certain third party sort of research tools and so on and so forth, to see whether the stock is going to be doing well, how it is likely to be in terms of the outlook and so on and so forth. See, I just give a very, I would say, a small snippet I would like to add. Sometimes what has to happen is, I always used to think, you may laugh at what I'm going to say. You see a recruitment ad in a company. Okay. You see a recruitment ad in a company, the company with, the headhunter advertises in big national newspapers saying that they are looking for a business development manager for the expansion of this particular company, so on and so forth. So what does it indicate? See, again, you need to correlate everything else. So you automatically know that the company is going to expand, where they are getting a new sort of technical talent for that particular role. So if the company doesn't see a potential for them in that particular area, so they will not appoint a new recruit or a new talent. So automatically your antenna should go up. Sorry, this is just a small snippet.
True,
So I
true.
think every investor should get this snippet on their own. They should look at recommendations like this, not just tips alone. So you need to be a widely read person. It's a slow and a steady process. It's not a zero-sum game actually.
Understood. It is not like, don't get tempted by the recommendation what you see. You apply yourself, you study it,
Exactly.
put your
True.
time in understanding it. So this
Correct.
is normal. Do you have the same in scenario in Muscat also? YouTube
See,
on your side?
here, let us say this is not a very big market because the number of stocks is not more than around about 400 or 400 or 450.
I see.
So essentially what happens is there is no much depth also in the market. And the the foreign investor is basically not so much coming into the market to invest in a big way, like very large markets like India or for that matter, even China. But again, transparency is very, very important in the market.
Absolutely.
No, you don't get, because if you invest in Oman, people are allowed to invest in Oman. But sometimes what happens is you don't get that sort of liquidity. So you may not get the right price when you want to sort of invest into that, want to liquidate this particular holdings, so on and so forth.
So there is low disturbance with respect to YouTubers on your stocks.
Exactly. Yeah,
Okay.
exactly. What you said is correct. Yeah,
So,
correct.
so
Within the
nice.
GCC, Saudi Arabia is a good market where there are a large number of stocks is there. Because if you
Right.
look at the GCC's profiling itself, Saudi Arabia is the largest market in terms of the size of the market, in terms of geography, in terms of per capita, in terms of, I would say, the national income, etc., and the number of companies, and so on and so forth. And the large oil reserves, as you know.
Great, great. I think these are very interesting scenarios you brought before us, and also taken us step by step how, as a new investor or a person who doesn't know about the markets, also should get educated, and also to lay hands on the research tools. How that will be definitely useful to him to nurture his money. It is a hard-earned money of all investors, should not go waste. So the education is the basis, awareness is the basis, and knowledge learning is a process one should keep on doing it. I think from my side, I think my questions are done, and we look forward for another webinar series with knowledge series. President sir, Suresh sir, from your side, any comments or closing remarks, please?
Yeah. I think today he cautioned all the investors, particularly small investors, not to fall themselves into some, rather getting trapped into certain things. I hope the viewers would have got some message out of it, definitely. Thank you, Chandrasekhar ji. Very nice and
I
what's
would.
called very useful information you have given. We hope to have you in many more webinars on various topics in days to come, sir. Definitely.
Thank you so much, C.S. Suresh and Dr. Prasad. I think it's been a very invigorating and very wonderful session for me also. Good learning, because to speak on a very prestigious platform like ANMI is something, a very privilege, I would say so. Certainly, I have already been contributing to the magazine from time to time. So look
Yes.
forward to closer association. And thank you very much, C.S. Suresh, for recommending me initially. I would never forget that. Thank you.
I,
No.
I,
It is our
I,
duty, sir. It is our duty.
I kept my sentence for closing remarks from my side, thanking you, and you are wonderfully contributing to educate our journal members or readers. So this is definitely a great effort, sir. We thank you very much. And Suresh, sir, we are highly thankful to you for spending your time to attend this webinar and giving your welcome address, and as well as the closing.
Thank you to all the members and the
Thank
clients
you,
also.
Chandraji. And then we will take
Thank you,
leave.
sir.
We
Thank
will
you.
wait
Thank
for
you.
the another
Thank you.
session.
Yeah.
Thank
Thank
you.
you very much for all the listeners also. Thank you.
Thank
Thank
you
you.
very much, sir.
Thank you.
Thank you.